Have you ever noticed something strange? Every few years, something breaks, markets crash, jobs disappear, prices rise faster than wages, and suddenly, the future feels uncertain again. We are told it is unexpected, a shock, a once-in-a-generation event. But here is the truth no one likes to say out loud. We have been here before. Not once, not twice, but over and over again. This is not chaos, it is a pattern. And once you see it, you cannot unsee it. There is a famous saying, history does not repeat itself, but it often rhymes. Financial history rhymes constantly. Different countries, different technologies, different excuses, but the same outcome. To understand why financial crises keep repeating, we need to stop thinking about them as failures and start seeing them as cycles, because cycles have phases, and phases repeat. Let us go back to one of the earliest recorded financial manias. Netherlands, 1630s. Tulips were exotic, rare, a symbol of wealth and status. At first, only the elite owned them. Then prices started rising. People noticed. Soon, everyone wanted in. Tulips were no longer flowers. They were investments. Some bulbs sold for more than a skilled worker's annual salary. Others cost more than a house in Amsterdam. People borrowed money to buy tulips. They traded tulips they did not even possess. There was one belief driving everything. Prices will keep going up. Until one day, they did not. Buyers vanished. Confidence collapsed. Prices crashed almost overnight. Fortunes were wiped out. And after it ended, people asked the same question we still ask today. How could everyone be so foolish? But that question misses the point. Tulip Mania was not stupidity. It was human nature. Every financial crisis follows 4 psychological stages. Stage 1, innovation or opportunity. Something new appears. Tulips, railways, stocks, the internet, housing, cryptocurrency. At this stage, growth is real. Stage 2, speculation. Prices rise. People notice, stories spread, early investors profit, others rush in because they fear missing out. Stage 3, euphoria. Logic disappears. People stop asking what this is worth. They start saying this time is different. Debt explodes, risk is ignored, warnings are mocked. Stage 4, panic and collapse. A small trigger breaks confidence. Prices fall, fear spreads, everyone rushes for the exit. But there is no exit. This pattern has repeated for hundreds of years. In England, 1720, the South Sea Company promised enormous profits from trade. In reality, the business barely existed, but the story was powerful. Politicians invested, celebrities invested, even Isaac Newton invested. The stock price soared, then it collapsed. Newton later said he could calculate the movement of the stars, but not the madness of men. That madness still exists today. Different century, same psychology. Here is the uncomfortable truth. We do not learn from past crises because each generation believes it is smarter than the last. Technology changes, language changes, behavior does not. Every bubble convinces people that risk has disappeared, that rules no longer apply, that old warnings are outdated. When the collapse comes, it always feels sudden, even though it was building for years. Crises feel like surprises only to those who do not study cycles. The most dangerous belief in finance is this. This time is different. Those 4 words have come before every crash, every collapse, and every financial disaster. When people believe the cycle has been broken, they stop protecting themselves. That is when the damage is greatest. Financial crises are not glitches in the system. They are features of it. They cleanse excess. They reset debt. They transfer wealth. They repeat because human nature does not change. Because debt grows faster than reality. Because memory fades faster than risk. This series exists for one reason, to help you recognize the cycle before it reaches its final stage. In the next episode, we go deeper, because behind every collapse, there is one invisible force pulling the system forward. Debt. Once you understand debt, you will understand why collapse is not a possibility, but a certainty.